You are monitoring the Nasdaq. You are waiting for it to remove liquidity so that you can enter into a trade. However, this does not occur. Suddenly, there is a reversal, and the price moves without you. The trade is lost. Now imagine that you opened the S&P 500 chart and saw that liquidity had already been removed. That was your signal. This is correlative SMT, a method that reads the market through the divergence between two assets. Today, we'll break down how it works on indexes and in crypto. And most importantly, I'll show you how to use it in your trading. Don't rush to switch channels. In a few minutes, I'll show you the full mechanics of SMT so you don't miss out on such trades again. SMT stands for Smart Money Technique. The essence is simple. We take two correlated assets, for example, Nasdaq and S&P 500, or Bitcoin and Ethereum, and see which of them has already had its liquidity withdrawn. If one asset has updated its high or low, but the other has not, this divergence shows where the market is really going. Here's a simple formula. Compare, find a divergence, confirm an entry. SMT is not a buy-sell button, but a filter that shows where the market maker has already revealed their cards. Why does this technique work? Smart money takes liquidity where it is easier to do so. We see this hint and manage to enter, while most are still waiting for the classic signal. Let's get straight to practice. On a live chart of Nasdaq versus S&P 500, I will show you how such a discrepancy looks and where exactly to take the entry point. Open the S&P 500 and Nasdaq charts. First, look at the S&P. It updates the low, withdraws liquidity, and immediately shows a weak reaction. No continuation, no aggressive buyer. At the same time, the Nasdaq remains below its previous extreme. It didn't even try to break through the low. What does this mean? This is a correlative SMT divergence. The stronger asset, in this case the S&P, broke through the stops, while the weaker one, the Nasdaq, failed to do so. This divergence indicates that the momentum has been exhausted and now the market has every reason to reverse. And this is where trading begins. We don't enter blindly. SMT works as a filter, not as an entry button. If we see this divergence, we return to the Nasdaq chart, mark the zone of interest on an order block or FVG, and wait for the price to return there. Already inside this zone on a lower time frame, we catch the change in structure and enter. It's very important not to confuse. SMT is not a pattern. It's a context that tells you when the market is ready for a reversal, but the entry itself is only based on the price reaction in your pre-marked zone. Now let's apply the same logic to crypto. Bitcoin and Ethereum often give even clearer SMT signals. Let's see how to catch reversals there. On the chart, Bitcoin and Ethereum in the London session. Bitcoin is falling below yesterday's low and taking liquidity with it. At this point, Ethereum remains above its extremes and does not touch liquidity from below at all. This is SMT divergence. One asset has removed stops, the other has not. What does this give us? Context. The market has already fulfilled its task of removing liquidity and is now ready for a reversal. If you look at only one chart, you see half the picture. SMT reveals the behavior of the market maker, where it has already taken what it wanted. How to proceed? On Ethereum, mark the zone of interest where the aggressive initiative came from. Wait for the price to return to this zone and monitor the reaction there. It's important that there is a shift in structure or local inefficiency at the moment of contact. Only then can you look for an entry point. Bitcoin has already taken liquidity. This is the filter. Ethereum is the tool we work with because it provides a clearer model, a more compact zone, and a more understandable risk. It's a mistake to enter simply because there was an SMT. No, SMT is not a signal. It's a hint. The real entry point is after a reaction in the zone confirmed by the structure. Another thing to keep in mind is time. These signals only work when there's volume in the market. If you're trading SMT at night, you're trading blind. The clearest scenarios come in during London in the first 2 hours of New York sessions. The most difficult thing in trading is not learning a ready-made system, but applying it every day. It's for such cases that I created MiloBot PRO, an expert advisor that trades completely automatically according to its proven logic. This is not a smart money bot, but a tool for stable auto trading while you focus on finding your system. The account where MiloBot works has grown from $34,000 to $272,000 in 4 years, and all statistics are open on MyFX book. You can see for yourself. Do you want to see how it trades? Download the demo version, run it on history, and see for yourself. The link is in the description of this video. So, correlative SMT is a way to see where the market maker has already taken liquidity before the crowd even realizes what has happened. Remember the formula. Compare two assets. Find a divergence. Wait for confirmation. Enter at the right moment. If you get how this filter works, your trades will be way more accurate and conscious. In the next video, we'll break down ICT Silver Bullet, a setup that shows up at a specific time and basically gives you a ready-made enter button to get in. Most traders simply miss it because they don't know where to look. Subscribe so you don't miss the next video. ICT Silver Bullet, the perfect entry at the right time. And if you found the video about SMT useful, a like and a comment will help the channel grow and bring you even more practical strategies. See you in the next video.